this setup gives me a 1 to 10 risk to reward, but most traders miss it because they enter too early or too late. What I'm about to show you is on gold and how you can capitalize on, how you can capitalize on future moves like this, 1 to 10 risk to reward, even simple 1 to 8s. And this is what we're catching in the VIP group. And it's obviously, if you know how to draw your zones, if you know when you exact entry moments, trust me, this will become the new norm for you, right? I'm going to be showing you break it. Let's start from here. Gold for the example. So we've got consolidation through here, right? And we've got it's EMA here. Red basically indicates that we are bearish, green indicates we are bullish. Now, what do you see over here, guys? Price is just bouncing like ping pong, right? So what we're going to do is get this tool over here. So we're just bouncing up and down, right? Up and down. And for the first time, look what happens here. We break all this support, right? We break this support and we create a new low, pretty much, compared to the previous support here. Obviously someone's gonna be like, oh yeah, well, this is lower. Well, the previous low, but just focus on this area here, the ping pong area, right? We'll keep this nice and simple. Price creates a new low. Now, where majority, again, entering too early, like I mentioned at the beginning of the video, some people will just take the position from here, look for a retest, and let market, but what happens? Market would have taken you out. When would have been the right time to enter, right? Let me show you. Let's break this down one by one. So I'll just put this on the replay, and so I can show you a few things stand out straight away. Let's go back on the bigger time frame. That obviously market is just jumping up and down, right? What happens is, if I was go on a little bit of a small time frame, look at this. This is around 3:30 p.m. UK time. So tons of volume is about, at this point, New York session is open, but still price, when it comes up here, it just tumbles back down, right? We've got a resistance created over here. Not only that, a left shoulder, the head over here, and the right shoulder, and it comes down here, right? You got your long wick rejection, bearish candle, but it's not that still. Look at this. We create a new low, price comes back up, and this was just trapping everyone. Anyone started looking for sells over here, this bullish candle were taking you out, and then look at this, a super strong no wick at the bottom, guys, a bearish super strong long wick rejection candle. What happens over here? After that, the market just melts. Now, is this the absolute best area of entry? No. This is why I want to obviously refine this and break this down. I could have put this here for the beginning of the video, but I didn't want to just I wanted to actually refine this as we go along. So let's go on a small time frame, and what we're gonna do is let's go on a much smaller. Put on favoritize that. Okay. Look at this, guys. What we could do is mark a mini zone. We're gonna mark a mini zone. Why am I marking this as a mini zone? This area. Well, this is a area, right? And I'm gonna mark another one over here as well. Because look at this. Whenever price comes down here, it starts bouncing back up from here. This is the first time price breaks through, and look at the size of the bearish candle as well. It broke through with a lot of volume, right? No bullish candles in between, no buyers in between, all bearish candles. Breaks through, then it comes back up. A majority of the people, of traders, they would have waited for something like this. Some even taking impulse buys. Now, there's nothing wrong with taking impulse buys, but as long as you do it properly. But if you take just rejections here, wait for rejection, well, there isn't any rejection. A lot of people have been taken out, and a lot of you would have just been taken out. Now, when you see a lot of volume, now obviously this candle, broke this area of interest. Look at this. So I mean, let's break this down slowly, right? Look at this. Left shoulder, the head. Right shoulder, price indicator is going to turn bearish. What happens? It flips to the upside. Why? This is an inverted head and shoulder pattern. A left shoulder here, the head, right shoulder, price comes back up. But something interesting happens. Look at this. This left this head and shoulder on the left side here, when it comes down, it breaks the previous area of interest. This inverted head and shoulder, when it comes back up, it does not break, you know, the highest point of the previous head and shoulder. And then look at this. Left shoulder, the head, right shoulder. Once again, there's 3 head and shoulders in this. How crazy is that? Let me just mark this out. Left shoulder, the head, right shoulder, right? So this is the first head and shoulder pattern. What do we have here? Let me just look at this. Actually, let me just keep that one there, and then I'm just going to draw this a different color. So now what do we have? The left shoulder here. This is the head. A little bit of a little shoulder over here, and price pushes up there. So what we'll do, we'll call this one red. And then once again, look at this. Left shoulder, the head, right shoulder. Super important. Okay, so we got one head and shoulder in black, one head and shoulder in red, and one head and shoulder in, you know, in green. What is the difference, guys? What do you see over here? When this right shoulder is complete, right, look at the volume of this. There is no better wick at the bottom. A super strong bearish candle. After that, it absolutely just melts off. You could have just taken your trade off this. 1,000,000%, guys. You could have just taken your trade off this. Right, so let's put the stop loss over here. You could have had your stops, you know, above this candle over here. But still, I would have, you know, I like to just dissect and, you know, refine. I would have just kept it like this, and then just let a volume come in. And this is absolutely normal, right? Adding head and shoulders patterns to your confluence. If I even show you, let's show you some of the students. Some, you know, this is the VIP group. This is locked off, obviously, when you're joining. Link will be in the video description, guys. This is one student catching almost a 1 to 6. It just goes on and on. This is the VIP side. If you go in the winning section, in the free public, you know, side, you're gonna see a lot of my trades, student trades. I mean, it just goes on and on. I can just keep on scrolling. It just goes on and on. You can check, you know, previous videos, catching 1 to 15s, 1 to 20s, making. I mean, there's one particular student, you know, he's just absolutely killing it. So yeah. Anyways, you know, if anyone is interested in a one-to-one mentorship, I just want to give, you know, everyone know I'm just super selective on who I work with now. I'm just keeping the group super tight. So I mean, I do get a lot of messages, but obviously not working with everyone, not working with beginners especially. So this is the idea, guys. Don't just, when you see a setup, don't just jump on it just because you think, okay, you know, hopefully this trade will play out. No, you can't be hopeful in this game. I want to make that very, very clear. Trade off what you see, you know, and don't try to predict, don't try to hope. In this world, in the trading world, it does not, being hopeful does not work. I hope you found value from this. Make sure you hit that like, subscribe, you know, to see more content like this. Take care. I'm out.